Hey guys, what's up? Here with Niels, FOMC. Hope you guys are ready and sized down a little bit. Who's in the position already? Let's hear it in the chat. And tell me your size, the size of the position too.
Be honest, guys, be honest.
Or if you're just not planning on trading today, you could say that too. Yeah, what are you doing around FOMC? What's your plan?
Yeah, hey guys, how's it going? Yeah, so my main thing with FOMC is that I don't trade it. To me, it's a little bit too high risk, but I tend to just trade some evals or trade an account that I'm not afraid to give up, you know? Like if I have one account that, I don't know, maybe it's almost blown, something like that, I'm like, okay, I can risk that. But in mainly, I tend not to trade it until at least a couple minutes after, 5 minutes after, until things have settled down. Yeah, I'm trying to be careful.
Yeah,
most of the times.
No one gets in trouble for skipping FOMC.
Yeah, exactly.
Yeah, those volume bursts can be deadly. The volatility can just rip. I don't know. We don't know what's going to do today. I don't ever anticipate what it's going to do. I just wait for it to happen, see what's happening, monitor the volume output. Is it getting to some interesting levels? Might take a little bit of a starter, and then still looking for the same probability, high probability exits. So, but yeah, sitting on your hands is an awesome move today. There's really nothing wrong with it unless you're comfortable with it. Today could be lower volatility on the hit, but if you've been through this before, I know that we've got some new traders, of course, mixed in with older traders. Sometimes the FOMC events can be have ridiculous volatility. So stop losses might not work how you expect.
Yeah, you might get a lot of
always have it on, but yeah, the slippage can be ridiculous.
Yeah, so go ahead.
I was just going to say one more thing is we are going to do a giveaway. We'll do a couple $200 credits. We just need 100 likes. That's what I'm hearing. 100 likes, and we'll open up a giveaway link you guys can sign up for, and we'll spin the wheel.
Nice. Which way you full porting, boys? Yeah, that's one way to do it, but I would say it's not a long-term solution.
Yeah, usually the odds on full porting is literally, people make a joke of it, but you're probably better off going to Vegas.
Yeah, for sure. Yeah, even with the volatility in between, right? So you probably will stop out before you get to your target. So
yeah, exactly. Yeah. How much are you willing to risk on that full port? I guess everything.
Yeah, exactly.
But yeah, everyone pay attention to your daily risk. You got a daily loss limit for a reason. It's not a bad thing. Might be a bad thing if you're trying to just hammer through evals at all costs and you don't care how many times you reset. But where's that going to get you skill wise, huh? What are you going to take from this?
Not much, I know that. Yeah, so if there's going to be a big move, I'm mainly just going to watch for points of volume consolidation from before. So if we go straight back up to, let's say, 49s, 50s, or to VWAP, I'll give it a go. I think shorting it, but yeah. But
you said you're sticking to evals today, though. No.
I'm stuck. Yeah, just trading eval. Yeah, I traded funded this morning, but yeah, very, very calm. I don't really like, per se, as an order flow trader, I don't like the rollover week, and especially combined with FOMC, it's just very hard to get some decent risk going on. And yeah, so I just kept it small, and that's okay, I think. maybe
Trump's gonna try to outshine some of this FOMC.
Yeah, maybe.
He's gonna do a press conference at the exact same time all of a sudden.
Yeah, that could be funny. Yeah. Let's see.
Or tweet something.
Yeah.
About Iran. Let's just add to the man.
Yeah. That would be nice.
Fundamental or technical, which one is control the market? Each one of those sides, I think, would debate that that one or the other is the more important one. But I think when they align together, you're going to be getting some good correlation, and that's really what you find pushes a lot of the market. Like when you see both things arriving together, even just really basic patterns, like you see, a major dip over a month, and we're starting to break new highs. At the same time, there's a news announcement. Those are sort of the killer combos, right? Things like that. But FOMC is you just have to remember there's a lot of people looking to make a trade off it intraday, sure, but more likely institutions are going to be repositioning themselves based on outcomes too. So it's just a lot of decision making all at once. So it's to some extent it's pretty random.
A lot of rebalancing probably. So
a lot of rebalancing, and it's a liquidity event. Well, if that liquidity starts coming in heavy enough, they're going to want to rebalance.
Yeah, exactly.
They don't want to move the market by rebalancing over the next week. They could take advantage of liquidity here. So,
yeah.
But it all goes together, and then it's like I sometimes picture it as like a hose, water shooting out, and you just can't predict where it's going to go next. Just shooting all
exactly. Exactly. It would be nice to see some movement. Let's see how it goes. I usually don't care that much which way it will go. If it goes extreme enough, I'll fade it, I think. But it depends a little bit. Yeah.
Don't become the liquidity.
Yeah.
Or become the liquidity and
I mean, I would say I would prefer that, I guess. Be the market.
And be the market. Become a bank.
Yeah, exactly.
Make enough today to become a bank.
Yeah, make enough so you cannot lose.
Your mileage will vary, and past performance is not indicative of future results. Let's put that out there too.
Yeah.
And tie your shoes.
Are you using daily market profile or New York system profile? So I have it split. So I have both on. So I split the volume with RTH and ETH. Yeah.
Yeah, and I'm just using ETH on mine.
Okay.
For now.
Yeah.
Sometimes you'll find me using TPOs as well. It's sort of the thing I go back and forth through for analysis. TPOs I like because it gives you a abstraction over where the most time has been spent, as opposed to relying on vertical candlesticks that sliced at time. It's helpful for that. But right now I'm just trying to focus a little bit more on volume than I am on time, and sticking to candlesticks for shorter term trends.
Yeah, it makes sense. I do have 1 minute charts up, but mostly for context a little bit, I think. My main chart is still the footprint chart with the volume profile next to it. So that's what I use most still after 17 years.
Can't lie about volume.
Yeah.
Can lie about price a bit, but it's a lot harder to hide where you're spending money.
Exactly. And yeah. But the bigger ranges, the bigger zones I get from the volume profile, yeah, for sure. But this LVN here is also interesting. It's together now with the VWAP. So if we do move up, that will be interesting to see.
Someone was asking about market profile. I just wanted to throw out markets and profile is sort of the standard by Dalton. Anyway, available anywhere, or Mind Over Markets is another one there. Good baseline for understanding. You can take as much depth out of it as you want, but for understanding just basic market mechanics and auction market theory, those are some good books. They do go really far, and I don't fully latch on to all the observations that are made, but the basics are really good. We're here finding areas of value, and markets tend to traverse value. And if they break value, then they look for other value. Where are buyers and sellers able to meet and form a balance? I think that's important with markets, and if you monitor them long enough, you'll realize the markets definitely move in that way quite a bit of the time, especially with indexes and very, very, what's the word I'm looking for? Not optimized, very
Efficient?
efficient. Yeah, sorry, very efficient markets. That's why I like futures a lot, because it's you get access to a lot of markets that move pretty well like that. But efficient markets aren't always the best thing either. So it's pretty exciting. The CME is going to be bringing in some single stocks. So maybe you trade a Tesla futures or one of those.
That will be interesting for sure. Yeah.
It'll be interesting to see how the props adopt it, because it is pretty wild where you can get just one event and the thing's just ripping for days and days. Not that that doesn't happen with indexes, but you tend to find more inefficiencies in single stocks than you would in an index.
True. All right, so
coming up here,
yeah,
we do have a video stream that we can flip to for the people that do monitor the fundamentals. I guess you could wrap it up into. Niels and I don't, though. Niels and I tend to look at FOMC as a volatility event and not try to form a directional bias based on the information released in the news.
Right.
So I brace for volatility, and I look at the technicals of where we're at, and then I would be looking for possible continuations.
Yeah.
Or, if there's a lot of absorption showing up and price can't move, and we keep rejecting at an area that seems to be an extreme in multiple ways, I'll look to fade it. But, funny enough, neither of us really like to trade FOMC, but we're doing this anyway because FOMC is pretty exciting. And we'd like to hear
it. It can be. Not always, but it can be for sure.
Yeah,
let's see how it will be.
With all the other stuff that's been going on lately, it feels like FOMC doesn't even matter.
Yeah. Yeah, exactly. So let's see. But yeah, I see the order book getting empty for sure. So that's interesting to see. It's very, very empty. So probably will have some volatility.
Yeah.
Which
when he's talking about that over there, for the people that don't understand, so he's looking at the DOM over there, which is also referred to as the order book, and you can see on the DOM the resting orders and what you tend to see between these major news events. And I know a lot of you guys already know all this stuff, but some people don't. But a lot of what you see before a news event is people lift their bids and offers off the books. They're like, I'm also standing back, and that goes at the highest levels. And not to say that they won't immediately execute and put bids and offers on when it occurs, because that's where they're going to make their money here. That's where those high frequency algorithms really shine, is hiding intent and then popping on offers and bids without flashing them. What was that? Did you hear that, or was that just on my computer? Okay.
It was your computer, I think.
Yeah. Okay.
Very, very little movement so far.
Yeah.
Moving up though, but very controlled.
Yeah. Nothing erratic yet. It definitely feels like it's just continuing what it was doing.
Yeah, it feels like a non-event almost. Maybe we should wait for the meeting, for the video, the comments.
But the video there.
Oh, it's starting in 30 minutes, right? Yeah.
That's 30 minutes. I'm sorry. I thought it was 2. No. I'm way off. I did not do my homework.
That's all right.
Oh, yeah. Okay. It's a rate statement.
Yeah. Yeah, nothing there yet.
The board consists of 7 members, or governors, who are nominated by the...
Yeah, so sitting here at VPOC level, pretty much. was gonna say it might be a short at 36, but it's already moving. Still very low volume.
Yeah.
Makes it very hard to, for me at least, as relying on volume and order flow, to take some trades without being stressed out about it, because the book is so empty, it can go anywhere, right? With almost no volume, and usually that's a reason why I don't take it if it's like that. Yeah, so we basically just hit the upper cluster of the volume here, and well, volume value area as well. It's kind of it for now. Here's the other volume that it was testing at, and yeah, I guess now it's decision time. They want to move it higher or wait for the actual words. So it's going to be in 27 minutes. I don't think they would care too much, but who knows? Maybe he's gonna say something unexpected, but that seems very unlikely, I think. But
Hi, Josh. Are market makers obligated to provide liquidity during news events? So I don't know that. I know some about this, but from what I understand, that they aren't required during super high volatility to do it, sit on the bid and ask. They're trying to make money that way too, because that's how they're incentivized, is to be able to sit on the bid and ask and provide that liquidity. But they're not always 100% required to be doing it at all times. If there's something extreme going on, they're not forced to lose in that way. But like flash crashes, I'd imagine news. That's about all I know about it, though. So I was never a floor trader.
me neither. I've been on the floor though, because my old office from the prop firm in Amsterdam was on the actual floor in Amsterdam.
Oh, that's neat. Cool.
Yeah, pretty cool.
Bunch of spazzed out guys yelling at each other.
Yeah. No, it mainly right now it's just like they divided it up in different firms, and some Forex firms are there just doing trades.
Yeah, not just a bunch of guys on computers.
Yeah, that's
casually chatting.
Exactly. Yeah.
Forgot how long it wasn't that long ago when you were trading institutional, right?
Yeah, right. Yeah. Since it's an eval I'm trading, I might force myself to do something. Let's see. It's still rejecting here. Well, it's hard to call it the rejection here if it moves so quick, but still 36 here, as you can see, it's still rejected a little bit there again. Built some volume and tested it, and now doing lower.
And you're still looking for shorter scalps, right?
Yeah, but it's very tricky.
I'm not seeing much of anything that I would take.
It's already moving. It's kind of already doing the
move. It's high on oil today. So there could be an opportunity for continuation. We're sort of riding that longer term trend here on this. These are 30-minute candles, and it's a mess when I zoom out, but if we can hold this, there could be an opportunity here for either continuation, break the high again, retest it. So if I see something more down to these lows, a real push, and then some trap buyers, I would be looking for entry around here.
Yeah, so what do I like most, volume profile or TPO? Well, I don't use TPO, so that's a pretty easy answer. Yeah, at the moment I just use volume profile. I've used it in the past, but to me, to how I trade, it never gave me an extra edge or something more info that I needed. So I just left it off, and I just trade with volume profiles at the moment. Yeah. Well, at the moment, the last 10 plus year. Yeah, it's very little volatility right now still.
So, how's the weather?
Yeah, exactly. It was good here actually, but it kind of turned around.
What's good? What do you consider good over there?
Wait, so yeah, you guys are in Fahrenheit, right? So let me see. Celsius.
Good in Florida is when I don't get a sunburn walking to the car.
Yeah. Like 70, I'd say.
I'd agree.
70 is sunny. Yeah. But yeah, it started raining again. I'm like, oh, why? Yeah, it is what it is.
Sure.
But next week is sunny again. I see 70, 71, 72. So all good. Got some time to work now.
Something else to consider on FOMC days, because usually, not always, pre-announcement volume does reduce. The existing volume profile, the developing volume profile, lacks as much meaning for me because it's less volume than normal. So there's less positions that I'm basically referencing using volume profile.
Yeah.
At least that's how I look at it.
Same.
So even though volume's building up around here, potentially buyers holding limit orders, going sideways here, looking for that longer move, I don't trust this as what I would normally treat this volume nose at, this higher volume distribution as.
Yeah. Yeah, that 36 rejection played out pretty nicely, I'd say, I have to say, but it's hard for me to get in. Not much to do now. They're kind of trying to build some kind of support here, sort of, but I don't. Yeah, it's still low volume, so
yeah,
hard to say. But you can see that the profile is like tapering to the bottom, and that's usually an indication they want to go back up. But in this case, I'm not so sure if I should add that much value to it.
Just reach out on support chat. That's usually reserved for people that are at least in the same brokerage, and higher priority is the brokerage traders. But if you are in assessment and we have time, we will make time. Your assessments have been so trash. Yeah, it just depends on your strategy, right? I find a lot of people are either looking to fade a move too early, or they expect a trend every time. Both are dangerous. The rough stats you always hear about, and it's not wrong, is somewhere around 1 in 5 days is really a trend day where you're going to break out of ranges and really make a push the distance that you want it to be, the one that you're thinking that happened last week. But if you're betting on that every time, and it's reverting, you probably know that story, getting stuck in that loop, expecting the big move, which is fine. Like if your trade is a trend strategy, again, Niels here can trade in a lot of conditions as long as there's volume because he's doing shorter scalps. But if you're looking to hold more of a position trade for a longer period of time, then you really have to manage your downside risk on the days that aren't trend days, because you can't always find them. You're not always going to have enough context, just because the market's always going to end up doing what it wants to do. So really just controlling your downside risk so you can get on those trend days and then make those trend days count for all the other loss days, because if you, depending on your strategy, you might have more losers than winners because of that. So any strategy, really, just protect your downside so you can catch the trade when it's working for you and catch the trade when your strategy really works the best. I lean more towards mean reversion, but what I've definitely learned is getting in too early on mean reversion. Sure, it works sometimes. Sure, you're like, okay, this looks like, some people might simplify it all the way down to, this is the candlestick structure. I like this candlestick pattern alone. And that's where, even if they're consciously thinking they're doing more, but when it comes down to it, they just find a little bit of sideways action, and then they take a long. You're like, oh yeah, it's going to revert here because of this candlestick structure. It's like, well, maybe you want to take a few more things to add to that and correlate a little bit more. Like, it's valid. Yesterday's low, that's a point of interest. And then you might start look at weekly levels, and I like to look at the VWAP deviations. Again, today's a little weird, but I like to see, are we in like the -2 zone at the same time? Are we starting to see buyers step up? Some people like to use RSI to determine, to abstract and get those numbers, but sometimes you can just look at the direction and the cumulative delta, which I don't have on here. I usually do. It was too messy for the screen size. But I'll start to look if the aggressors are on my side too. So all those kinds of things together, that's when I'm starting to look for maybe a reversal. And again, those happen a lot more for me. And I might not do a full position. I'll do like a very tiny position, kind of as a feeler. And then I'll add to that position slightly in the range where I'm entering into. And that pretty much works for me. But top down, look for multiple reasons for the trade, and those tend to be how my strategies develop.
Tried a little short, stopped out, break even. Oh no, they ticked me out in one. Oh no. I put my stop at break even plus 1 tick, and that was the high of this week. So it was retest of this volume right here, right? So I was like, yeah, I can give it a go at 30. And then I saw it working at 30, I went in, but my goal is to retest this volume here at 25. So I was bidding 25 quarter. And they're probably going to do it now without me, but that's okay. No, they really top tick me. Wow. So annoying. One contract. Yeah, see, there he goes. There he goes. Wow.
They target the sim traders.
Exactly. Exactly. I'm feeling like ICT now, Mm-hmm. They targeted my sim stops. Oh man, this is brutal. Oh man, yeah. Oh well, it's okay.
All right, who's in a position already? So lunch, I've done 4 trades, 2 stop loss, 1 break even, and 1 Okay, yeah. I forgot about FOMC, but closed green with 5% of the count. Well, it's good you corrected yourself. Or did you forget and then you found out after you were done? Either way, that's sounds like you did well. Most importantly, do you feel like you'd execute those trades again, given all the information you have? Or is it just because of the results? $1K today, Josh. I need more margin. Hey, if you're live and you're doing well, just reach out to support. We'll bump you up. It's a conversation you can have with the risk manager. Guys, what's your view on DeltaTrader on Twitter nowadays posting candle structure trades.
Mm.
So there's a lot of concepts in ICT that you can see that people use. A lot of it's auction market theory stuff. It's a lot. He hates to say it apparently that it's rebranded, but it's not new concepts that he comes up with. He does put a couple together, you could say. But what I don't like about it is saying that, it's all premeditated. It's all planned. This is how the algorithms all work, and they all work together. And they watch him trade and they copy him. Like, that's just so beyond being true, like in the not true sense. It's just not how things work. These banks and stuff, that's not what they're doing, guys.
Short of 25 quarters, I'm targeting the low, but my trailing stop is very tight. So let's see.
All right.
Trailing it. Trailing it some more. Trailing it more. And it's going to take me out, I think. Oh, no. Yeah. All right. Okay. I'm out. That was $300, I think. That was 6 points. Yeah. Yeah. So I wanted to short it at the little volume bump here at the 25s. And I saw a volume build up over here, and I was targeting a little spike up to fake out, for him to fake it out. Ideally the low, but this is also okay. So yeah, I might pass this eval, Josh.
Get it? Imagine we'll see a lot of people passing today.
Yeah. Let's see. But yeah.
A nice short. Looks like you got it in a good position there.
Yeah.
Now your question needs to be, where's your exit plan? Right now it's really exciting. Like, does this thing just fall off and you hang on to that short and make a ton? Or are you going to get a volatility event that does a pullback? I'm not trying to convince you either way, but I'm sure that's what's going through your head.
Right, exactly. That's why I just I will be out ASAP. Take the money, walk away. That's my main strategy. You know probably, but like I usually trade just the first 30 minutes after the open. That's it, and I just walk away. Do other things that are less stressful.
I think that's the dream that everyone hears when they're starting trading too. So to be able to do it, if that fits your trading style.
Yeah, and I think it's good for a lot of people, but I don't think it's just realistic in the beginning. That's the thing, right? So you need to learn so many things in the beginning that I think it might be valuable to trade longer, but not per se trade, but watch it.
Like working in the mailroom when you first started a company, and
exactly.
Then working on the farm to understand how everything gets to the table, but eventually you're the executive of this company.
Yeah, exactly like that. So yeah, and in that sense, don't expect to just trade 30 minutes when you're starting out for the first few years, really. This is like I should make it my slogan or something. This is hard, guys. Like I say this every stream, I think this is super hard to do. So don't expect to learn it in a year or so, or whatever you think the timeline should be for you. But this is hard. You always keep learning.
Niels, as you worked in hedge funds firm, do you find there any trader who uses simple candle structure?
Yes, there were actually, which was funny to me because it's so far away from how I trade. But yeah, there are, funny enough. Yeah, it's a lot of dome reading. Like I know a few super successful dome traders. They don't even use charts. They just trade the dome. But to be fair, that was just mainly on bonds, not on equities, not on indices and stuff like that. So that's different. But yeah, I've seen some crazy things there just trading bonds. And the thing is with bonds, you can trade size, right? So the book is so full there always. You can trade a lot of size with bonds. without influencing the market at all. So yeah,
If you don't fall
some big P&L swings. Yeah. Yeah.
8 minutes. Anybody have any more questions? Did we drop the giveaway link? Did we hit that? Oh, we're close. 89 out of 100. Oh, there it is.
Nice.
Sign up for that. We'll spin after FOMC a little bit. Hand out a couple credits.
Can I win too?
That doesn't seem right.
No, I know.
I trade bonds. There's nothing wrong about it. Absolutely not.
Oh no, there's certainly nothing wrong with it. On the contrary, I think so. Yeah.
I think the only problem you get is there's a lot of these other prop firms that don't even let you trade them because there was exploits rolling around. And decided to just pull it. You could trade bonds with us though.
Exactly. But yeah, one of the most successful traders I saw in the prop firm area, at least in Amsterdam, they were bond traders. Yeah. So. Yeah.
I think every one of them too looked at correlated markets and tried to look for one market, one of those markets moving when the other wasn't to catch up, then look for long.
Yeah,
it's very common for the bond traders I talk to. I don't know that many bond traders, and I never did it myself, so I'm green to it.
Yeah.
Yep. Use code NTF. That's for our boy Niels here.
Yes.
These are static accounts, and there's nothing like it in the industry. They're static accounts, which a lot of people don't even know what that is because most companies don't even have an offering like that. But it's sort of static's the best. It doesn't move. It's a fixed minimum balance throughout your stage. EOD is what most people are used to, which we still offer. It's a little bit cheaper in some cases. And that means your highest balance at the end of any trading day, your minimum balance will move up based on that. So it does trail you a little bit. And then there's some other firms that still do intraday trailing, which means in the middle of an unrealized trade, even if you haven't closed the position, your minimum balance is going to chase you up, which is generally the worst. So these are static, so these don't move. And these will get you to a live account in, I think, 7 or 8 days minimum. Again, that's minimum. So yeah, go check those out. They're on our website. Use code NTF. So Niels gets a little credit here for helping us out. And yeah.
Yeah, guys. So if you don't know what static accounts are, like, ChatGTP or something, I think it's really the best because it's the most real you can have in comparison with your own account or your own broker's account. Because they don't have end of day drawdown or whatever, all that kind of like BS that they thought of to punish you, static is as real as it can get, and gives you the best chance in succeeding, I'd say. But so back to the chart, they built some volume here. Like the orange bar is like the highest volume of the visible chart area at least. So I made it orange because that's the Dutch color. No, it's no reason, but it is the Dutch color though. But and it has some tapering, and it was only they only ticked it lower for one tick lower. So that's. Yeah, it tells me they might try something here. But again, we're having a speaker starting in 3-4 minutes. So yeah, might be more volatile. If there's something unexpected, I'd say. I don't know. I never really watched those speakers, but yeah.
Guys, did we do this one? No. Guys, I've implemented footprint and TPO chart in my trading, but I want to add DOM too. But I want to know what to watch on Dom that help us predict the market direction. So Dom's a feisty little sucker.
Yeah.
So what I would do is don't try to add everything onto Dom and understand it all at once. Literally just add a couple things. Just add last price and then what's on the bid and what's on the ask. And then just watch it. See if you see a pattern. And then eventually layer in. There's more information you can layer in. There's something that is basically the volume profile that you can put in there. So you can reference it on the DOM, how much volume has been traded at each one of these price points. And then you can layer on, if you're using Rhythmic, I think is the only one that has it, but they have MBO data. So then you can see block orders. I'll call them block orders, but basically chunks of orders that are from the same participant. So you could see maybe like someone trying to buy 80 at a time. Some people like to look at that and think this must be institutional. Maybe this has a better weight on direction. You'll see orders being pulled off the bid and all the different levels, as well as offers that can instigate that, you know, if price is moving up and people are saying, I don't want to sell at this price, it could mean that they're not wanting to get filled at that price, which means that price could be moving higher. Again, all could be's, and it's complicated and it depends on context, but that's what I would do. Layer it in. Start with basically nothing. Add one thing at a time as you understand it, and just
exactly. And if I can add one thing to that, if you're already profitable what you're doing right now, I would not add it. I would just not do it. Only if you're still searching into what like fits your style of trading, maybe you can explore it a little bit. But if you're profitable right now, and that goes for everyone really, if you're profitable right now, then don't change it. You know, don't try to look for other things that can work. Just do that, do it better, and do it in the end slowly. Do it bigger, and that's it. That's the whole game. You know. So yeah, I appreciate the question. And as you can see, I use the DOM, but you know, it's not per se helpful for everyone. And yeah, I think that's the main message.
So the prize is merch, not assessment coupon. Yeah, it's assessment credit. So it'll work for a reset or for new assessments. It'll be $200 a piece. We'll do 2 of them, I think.
Exactly. If it's not broke, don't fix it. That's a very
statement. Very true. Basically, every statement should be that when you're looking at doing something new.
Yes.
And if what you're doing isn't working, you know, what you're trying to do is find something that's repeatable, that you can build a risk-based trade around. Oh, hang on, it's 2:30. Let's just jump to that.
All right, the video is starting, I guess. Yeah. Okay, let's go.
Maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force. due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral.
So we're sort of just continuing what the day was doing already on the equity indexes.
Stabilize the labor market,
selling off here.
inflation to resume its downward trend.
Not that aggressive, and oil's holding. So nothing that exciting if you're in a short. No reason to get out in my mind. Not advice.
I mean, you might see some stop runs. Oh, here we like this. They read my mind.
Sure.
Yeah.
Below yesterday's low now.
Yeah. Yeah. So this kind of makes sense.
Cleanly working inversely to equity indexes, and all the equity indexes that I'm watching are on their way down.
Rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
How exciting.
Very. I almost fell asleep, but no,
Well.
but, yeah. The what I see is just, expansion of range and low volume, and
Yep, that's all I
not
see.
doing that much.
Just continuation of the same rotations right now.
Yeah. Let's see. Might hold though. They ran the lows with some stops because it went with some force. So usually those are stops. So could potentially hold here. But yeah, you'll be fighting against the trend. That's for sure. But yeah, I was thinking maybe to grab a long at 09s, but I was too slow and it's already back up. Yeah, not much to do now, really. One more comment. Yeah, you guys are right, but when I saw on Twitter every order flow trader using the dome, so it feels like I'm missing something.
Yeah.
That's why. Yeah, again, like it doesn't matter if someone else uses a rainbow or the moon or whatever, it shouldn't matter.
People do use the moon. Let's just put that out there.
Yeah. Like you can
Actually, I
use
think I have that lunar chart study in here.
Yeah, exactly. So
yeah,
it's like it's all good, but make it your own. Like if you want to use
the DOM is an interesting thing because what you're seeing on level 2 is intent, maybe, but that's not. It's not the whole order. It's just not. If you read about iceberg orders and understand those.
Yeah, and that's why I have the bits, but also the executed volume in the middle, which I reset every once in a while, so I can see what actually has executed. And usually it's a lot more than there was initially in the book, right? So they're either filling the bits or or canceling or whatever. So that gives you a little bit more insight. But again, like, be careful because it's too much too quick very soon, I think, if you're trying to analyze everything. So again, if you're doing okay with volume profile and footprint, then don't add it. Just maybe.
But I understand wanting to learn about it. It sounds like he's pretty dead set on at least understanding it. So watch it. Understand what it is. So it's people putting or participants putting orders on the books or taking them off, lifting them, and watch the patterns and see if you see something that makes sense. Because even in the sort of magic show that they're doing, the illusion of oh, we only have a little bit of liquidity here, but realistically, they've got 2,000 contracts they're trying to fill, and they're just putting a little bit on the books at a time. That's generally what you're seeing with an iceberg order. They're refilling, so they might put 50 on the bid, and then the level hits, and they let it go through 50, but they have 50 more below that, and then sellers are building into that, and then every time the 50 go away, they're at a ridiculously fast rate because they are using algorithms to execute. It's refilling those 50, if you can imagine that way. So every time that 50 goes away, they add, and it looks like it's going down, and it gives you that sense of the market's going down, but realistically they're just like, oh, as long as people keep selling to us here, we'll keep buying because we have
much more
me sitting at a desk. My order is I'm supposed to fill 20,000 contracts here over the next 5 days, so this is a great opportunity. That stuff happens, but if you can see through it and you can use the DOM to do it, a lot of people swear by the DOM and they make money, but don't believe everything you see on Twitter.
No, exactly. That's the thing. Yeah, exactly. I mean, I use it, but it's not my main trigger, right? So it does help to see the volume executed though in the middle. So it's not even the bid or the ask itself. It's just seeing the volume that's being executed at that time, right? And then I can already, because it's next to the bid, I can see if the bid that was like maybe like here, like the 116, I can see if it's filled or not. Like they could have canceled, but they actually filled here at the 09s. So you can see if they're filled or not. that it's
at least
very
some level of volume is executing.
It's very short term though. So
very short term.
If that's not your time frame, then it's probably not going to be helpful at all. And
there are some cool tools out there like Bookmap, and people do really well with that stuff. So if you feel like that, you gravitate towards that style for sure. But learn about it. But it's what I can tell you is we see the numbers behind the scenes, and people don't do as well as they act on Twitter. Let's just
you can see it here too, right? You can see the bigger bid at 05. You can see the bigger bid at 01 and 700. So you can see it in the book, but I mean, if it's really helps,
it's a decent way to find levels, because if you pull up one of those levels where there's a lot on the books on a single level, like out of the ordinary, then you'll look on your chart and be like, oh yeah, that's because it's this major level or this major level.
Exactly.
Oh, we're spinning the wheel that's gonna fall apart because it's got so many names on it. All right, let's go ahead and spin it. wheel of
There we go.
Jason Barnhart. All right, Jason. Congratulations. You get that
Congrats.
$200 credit. Raj will send you an email.
So many names. What tool and platform you use for footprints? Yeah, this is DeltaTrader. Yeah, DeltaTrader.
Yeah, so Niels is the founder and CEO of DeltaTrader. Chris Sosa, congratulations to you too. You will get an email. Let's do one more, since we have so many names. And this is going to give away Niels's car.
We're gonna get a new one, so yeah.
You just have to come pick it up.
yeah. It's in Portugal, guys. Convertible.
Okay. Michael, Trader Dude, Koenig. I don't know if that's your legit name, but
I mean,
if it is, that's super cool.
Could be Swedish.
Yeah, it's the Swedish Trader Dude. All right.
Yeah. Oh, nice.
Yeah, so the market's not doing that much, guys. What did you guys end up doing? Let's post that in the chat. You guys end up taking a trade? Did this help hurt your trade that you're already in? You sit it out? Do you have any questions that you want to put up there?
I'm super happy with my finally real backdrop.
Niels,
It's a
you've been
fake
trading
trend,
for so long. What's the difference between today's market and the old-timey market?
Oh, that's a good one.
Tell us about the Great Depression, Niels.
yeah, right. So, looking at the footprint, so I show this sometimes more often. Like, let me show you a footprint chart from 13 years ago. Here we go. So this is on my YouTube here. So this is a footprint chart, a 8-tick reversal bar. So right now I'm using a 20-tick reversal because the volatility is high. But look at the volume, guys. It's so different than it is now. Here, every price has like almost at least over 500 traded, you know, and 500, 1,000 here at the top, even more, 3,000, 4,000. Like it's such a difference. To be fair, the price was also much lower, so it was cheaper, right? But still, like, so the volume is so different, and look how it is now, you know, with here. Wait, can I zoom in? Yeah, I think so. It's 100, 75, 70, you know, like 21, 58. It's so different in today's market. So that's why the volatility is just, you know, it's very, very different than how it was. So
what's interesting too is in that period of time, you know, the micro products have made their way.
Yeah, true. That's
so traders back, you know, traders could start making use of micros for these smaller accounts and get access to this exposure. And that was then. It was a good idea when micros started coming out. But the volatility's gotten crazy and people are still sticking to their minis. They're still risking 2,000 to make you know, in a $3,000 account with their minis. I mean, you know, I know you're using minis most of the time over there, but you are a very disciplined person who takes very small stops. So
mostly,
mostly, no one's perfect, but
true.
Most people are not. And they're like, oh, you know, the last time I let it stop me out here, it was bad because it keeps stopping me out at a few $100s, and they're in a small account. And then they're like, let me just hold it. And it goes against them and they watch it. And it's minis, you know, it does not work in small accounts.
It's too much. Yeah, for sure. No, for sure. Even I'm considering sometimes still I should not be on micros, you know, because you can scale in much easier. But I'm normally not a person to really scale in. If I need to scale in, usually means I'm wrong. So I only scale in when it's usually if if I'm doing all right on the day. I usually only scale in when it's in my favor, when it's going already in my favor, and I want to scaling on a minor pullback, while still being in profit. I tend not to scale in when it's going against me. I'm usually just consider it wrong, and I might enter after stopping out again, or give it one more try, but that's about it. So yeah, in general, I don't really scale in that much.
Yeah, makes sense.
Yeah. But still, micros, yeah. I mean, I wish I had them when I started trading. would save me a lot of money.
It just never sounds big enough, especially when people are monitoring Twitter and social media for what people are saying they're keeping.
Oh yeah.
But it doesn't. It does not play out well, guys, in the long term for most of those people that you're seeing on social media.
Yeah.
Even statement, there's nothing really to trust for if someone's legit or not, because even if it comes to statements, they could have multiple brokerage accounts open and one of them sucks and the other one's killing it.
True.
They only show you the one that's killing it.
Yeah, for sure.
So that's why it always comes back to yourself.
Yeah, it's my YouTube, like it's at Niels Trade. So I think you can find the link there somewhere in the videos. But I have 2 videos from 13 years ago. One is 12 years ago. One is 13 years ago. Man, I feel old now.
I feel like
I remember when I started, I was like one of the younger traders, at the time, and now I'm like, yeah, that's been a while now, man. Like, you're not that young anymore. Funny. Yeah, reality kicks in, right? So, but yeah, this is from 2012 footprint chart, and I have another one. Oh, they're both from 2012, but this one is from May. Yeah, but as you can see here, like, look, so much volume, guys. This is also still an 8-tick reversal. Yeah, crazy. Like, it's so different. Yeah, you had to be more patient though for your trades. Like, it could move like only like, I remember, was it like maybe 10 points in a day could be a lot, So today is just very, very different. Like, you can trade 100 points sometimes, right? 50 is also nothing lately. But yeah, like if you're doing what is it, from here to here? Yeah, it's like it's not even 10 points. Like it barely did 10 points, and that was probably the whole day.
Right. It was pre-cortisol, pre-COVID, pre-cortisol, high cortisol levels.
Yeah, exactly.
And pre-COVID,
exactly.
Those go hand in hand.
Yeah.
Niels, all major hedge funds trade in New York time, or they operate another session also.
Oh, depends on the trade. Like usually they cover all the time zones, depends where they have offices, but usually they cover all the time zones. Yeah. But we did mainly Europe though, so mainly Europe, but also also New York and Asia. Yeah,
it tends to be best to try to trade around what product you're trading and which session it's closest to. So if you're trading Asia session, you're going to want to trade the what's that called, we say it wrong, Nikkei.
Yeah,
am I saying that wrong? Yeah, probably.
Yeah,
to trade that session, but yeah, just stick to the higher volume times and figure out which products work best for it. One thing you could say is the indexes, the major US equity indexes that the futures monitor are during the New York session and after hours, at least for now, that core product that it's based on is not even trading. So maybe that's not the best time to trade equity indexes. Sure, there's opportunity, but a lot of people kind of lean towards metals or energy futures when it's after hours. Just something to consider.
True.
Now you got access to Bitcoin and these other ones.
Yeah.
And then
sometimes it's easier to like spot the algos, in the overnight market. It's sometimes a little bit easier, but then you should ask yourself, like, am I really going to beat them? Because high chances are you're not. So, but in some cases, it has helped me seeing, like, not the noise so much, but seeing really clear, like an iceberg filling in overnight, because it means a lot if you see that in the overnight normally. It just doesn't happen that often. So yeah, I never watch it. And like I said, like at this stage of my trading career, I'm mostly just doing the first 30 minutes, and I do 15 minutes prep, or 15 to 30 minutes prep. Then the market opens, and I'm usually done before the 30-minute mark has kicked in, and might be 45 minutes sometimes, but that's about it. And I just walk away. If it's red, I'm definitely should walk away. If it's green, I'm also usually just calling it a day, and that's it. Yeah. And that's personal, right? So everyone can then have his own preference and things that you're good at. Yeah. Yes, I do own it. It's been a lot of work, but it's working. Oh, we have a copier coming next week, guys, or maybe this week already. So the trade copier, built-in trade copier.
Beta testing that yourself?
Yeah,
a bit, right?
I've been using it. Yeah. Yeah,
that's cool.
And, so far, so good. And I've been using it on my funded account, so it's risky, but yeah, it's going well. Yep. So next week we plan to put it in production. Yeah.
I guess we'll just wrap up through all the questions. Are there any more, Raj? Otherwise, we'll hop off. It does look like the equities market is still selling off.
Yep.
I don't know if you guys are still in that short. One of you guys was. I'm a crypto perps scalper, trading my own capital, but was interested in trading NQ and stumbled into TFT tonight. Cool. Glad to have you with us. We do have Bitcoin futures, micro Bitcoin futures, and Ethereum futures exposure. So if you were looking to spread out some of your risk, that's a way to do it. Cool. All right. I think we'll end it there. That was sort of an uneventful stream for everybody, but hopefully you guys got something out of it. Glad to have you with us. Thanks again, Niels.
Yeah. Have to be on. Thanks, guys. See you later.
Cool. Check us out in the Discord or whatnot. We'll be there if you have any more questions. Thanks, guys. Bye.